It's time now to get to the business news with Nicholas Poynton. Nicholas, you bring news of yet another listing on the stock exchange. What is this one?
Yeah, I think this might be losing its news value at the way we've been going. It's the second in as many days, the fourth of the year, and if the confetti cannons is anything to go by, there was a lot more excitement at today's event compared with yesterday. That's as the country's largest private retirement village and aged care facility went public. That's Radius Care. They debuted on the local market at about 11 this morning, and you did get the sense at today's event that it really was quite a momentous occasion for this company and for those who've been involved in it over the years, because it first started out in 2003, and its founder joked about how he expected to be, take the company public by 2006. But look, 17 years later, here we finally are, and to reflect that sense of journey and the people who've been part of it, those staff who've been with the company for 10 years or longer, doesn't matter if you're a nurse, a cleaner, a receptionist or a manager, you were allocated $1,000 worth of shares. And facility managers and senior management, they were also given an allotment as well. So that's about 160 staff out of 1,700 getting a slice of the company. And this company, it's either the fourth or fifth retirement village operator that we have on the market, though its business model is slightly different. Its bread and butter is specialised care. I think as people get older, they need hospital care or dementia care beds, and they may move out of a retirement village. That's where they put their focus on. It actually has the highest margins in the sector, and this company says it's well positioned for future growth because essentially our population is ageing, meaning more people will need specialised care. It's probably going to need more people need dementia care, and this company is set up to profit off that, which is quite depressing when you think about it. But it's an effective business model, and this is a company that's definitely thinking about the future. So no shares were actually floated today. They were issued to staff and other key stakeholders, like I mentioned, but this for about 80 cents each. But indicative bids show people were willing to pay up to an 80% premium at $1.49 each. So look, the fourth listing of the year, we'll have the fifth next week. That's New Zealand Rural Land Company, and I'll be back sometime in the show next week to give us an update on that and also the strength of the confetti cannons.
Okay, so the Financial Markets Authority, a bit of a warning to retail investors. What's that all about?
They've issued a formal warning today against an individual who engaged in market manipulation. They won't tell us who, but what this person was doing, they were using one of these retail trading platforms. We don't know which one, so we can't really speculate. But to explain what they were doing, I'll give you this example. Imagine you have 1,000 shares in a company and you attempt to sell about 800 well above the current listed price. No one buys, but you already expect that. Then what you do is that you buy a small amount above even that price in the same company. And because markets react to the most recent trade, it bumps up the share or the value of shares to close to that level, making what you are attempting to sell look more attractive. So
sounds like the Auckland real estate market, but yes, carry on.
So yeah, look, that's the FMA and the regulatory arm of the NZX. They do police this sort of stuff. It does trigger something in their systems when people engage in this sort of behaviour. The FMA, they investigated the person who was doing this. They gave them a slap on the wrist. They didn't give them a fine because they took into account that the relatively low value of the trade, the person's circumstances and their trading history. But they're really using this to really send a message to all the other retail investors out there, because we've been inundated this year with stories about people piling into the share market, taking advantage of all these apps as interest rates go down, share markets are taking off. But look, I guess what the FMA is trying to do here is saying that ignorance of the law is not an excuse. All trades must be legitimate. There are no real ways you can try and hack the market or try and game it, but you probably won't get away with it. So you should educate yourself and be careful, because market manipulation is a criminal offence. It can result in up to 5 years in prison or a $500,000 fine. Okay,
what numbers do you have on your post-it today, Nicholas?
So the NZX is down 29 points to 12,860. It's at 70.4. Our dollar is at 70.4 US cents, 94.2 Australian and 52.6 British pence.
Thanks, Nicholas. Nicholas Poynton with our business news there.